Hey guys, welcome back to my page and a brand new video. Quick disclaimer, this week I haven't been able to trade that much, to be honest, because I was ill during the start of the week and then we were celebrating Eid and then I was literally going out every day. So I decided to take the week off. But there was this one trade that I did catch during this week. I caught this on a Monday and I actually swung it until the Tuesday, where I managed to secure a nice and easy 1 to 13 risk to reward ratio. However, had you swung it until Friday today, where I'm recording this video, currently you'd be up around 1 to 30. So there was a lot of potential for this particular trade. I'm going to be breaking down the analysis behind the trade and I'm going to be showing you guys what I saw step by step. So first of all, we're going to take the time back to the Monday. So it was the 19th of July. We'll take it back to around 9 a.m. Okay, and then we'll start from here. So the first thing that you notice on the hourly time frame is how this internal structure here, price broke the previous low here, then the low before it as well, as you can see on the line graph. And then we want to see how price interacts with this area here. Now, if price can break the low over here, then we know that price has every intention to go down to a certain area because there is a purpose and intention behind every single candle that is printed within the markets. Okay, so there must be a reason why price wants to be bearish on the higher time frame. And it is up to us to actually understand what is the purpose, what is the objective of that institutional order flow. Okay, so then let's give it a couple of hours, see what happens. As you can see, we do break that low. So what I want to show you guys is if you look at it on the 4 hourly, you can see how we have the situation where it was like a drop-based drop. So it's like an institutional candle led to the breaker structure on the 4 hour, taking out the lows over here, as well as the low here as well. Now, the question is, why is price coming down? For what purpose? Where price is engaging with now is this little cluster over here. So let's have a good look at this cluster on the hourly time frame and see, is there anything there that price needs to engage with, such as an institutional candle, such as an area of liquidity, such as a liquidity void, etc. As you can see in this area, any type of void, inefficient price action, institutional candle, liquidity, they've all been mitigated, right? The liquidity here was taken out, the imbalance here was filled in, the institutional candle here was mitigated, so on and so forth. So there's literally no purpose for price to come to this particular area. That means that it must be going even further below, basically. So we go further to the left, and then what do we see? We see this situation here. We see what is an hourly institutional candle, a sell to buy that led to the breaker structure, taking out numerous highs, as you can see, highs here, the previous high here, so on and so forth, as well as creating a massive liquidity void that is later filled in. But notice how the void is filled in. So this entire section here got nicely filled in. However, the void was filled in, but the institutional candle did not get mitigated, right? They didn't interact with the institutional candle. Therefore, there is millions and billions worth of sell orders stuck within this candle. And those orders need mitigating, okay? And it's that mitigation process that gives us the guaranteed reaction upon the breaking even of those orders that allows us the opportunity to enter a potential profitable trade, okay? And to be specific, what you guys need to do is you actually have to go inside this institutional candle and understand what is the point at which you can say there has been a full mitigation taking place, right? So that is exactly what we're going to do. So I'm just going to take time back here to make our lives a bit easier. I'm going to try and go to the lower time frame. So we'll go to a 3-minute time frame and just investigate the situation. Now, as you can see, I already marked out there's this little base here that led to the breaker structure here. So we know that mitigation will be taking place here. You've got this little tiny internal base here. Let's see if we can look at it on the 2 minutes. Okay, we can. Yeah, you can see here. So price went up. And then you can see internally it went down and then shot up again, taking out numerous highs. So we can expect a reaction here as well. And then obviously we have the initial sell to buy. Now, I can't go on the 1 minute, unfortunately, because TradingView doesn't allow me to for data back on the 27th of May. However, what you guys can see visually is that there was a sell to buy action that took out highs, which would have existed on the minute time frame, right? So what we can do is investigate this little area by doing an entry analysis. So we do a little volume profile analysis and we want to see where are those sell orders hiding. Now, let me make the values black so we can see them. Okay, now you can see there is sell orders scattered 77, 115, 85, 95, 82, etc. So towards this area, there are more sell orders scattered, and this is the area that will be getting mitigated. Now, the best quarter number available in this area is 109.09. After that, we have 109.08, but it's outside of our range. We also have 109.1 as well. Now, I decided to enter on 109.1, I believe, due to spread. Okay, so I gave myself that pip worth so that I could actually get that guaranteed entry point. So that's why I decided to enter at 109.10. Okay, now in terms of stop loss, what I also realized was, although I could have put my stop loss right beneath this low and had maybe, a 2.5 pip, 3 pip stop loss probably. Yeah, 2 pip stop loss. I realized that there was also this inefficient price action here, this tiny little pocket of imbalance that has yet to be filled in properly. So I know that there was potential for price to fit in that pocket of imbalance, react, and then go up as well. So I had to account for that. So what I decided to do is put my stop loss beneath the pocket of imbalance, as well as this little area here, this little sell to buy action here. Reason being is because that was the last point that had yet to be mitigated, right? And any point before that, these lows over here had already been mitigated. So that was the lowest point possible. So therefore, we put our stop loss beneath it. I chose another nice whole number, 0.5. And I believe we have a total of about 5 pips worth of SL. Yeah, we do. So as you guys can see, on this 2-minute time frame, it looks like a massive stop loss, right? But in reality, it's only 5 pips, guys. Okay, so that's our entry and that's our stop loss. Right then, so let's take it back to where we were originally. We were around here. So market had broken the lows prior, had entered into this region, and we knew that this was the area in which a reaction is to be expected due to the full mitigation of that hourly institutional candle. Okay, and we've done our due diligence to locate the best possible entry point as well as the best possible stop loss. And now it's just a matter of waiting. So let's see what happens. So as you can see, price goes into our entry point. Now we do get some drawdown. As you can see, it's probably maybe 3.5 pips worth of drawdown. Price does go in. We get the reaction we wanted, but let's be specific, guys. Let's see, where did it react and why? And this is something that I like to do when I always go back and check my trades. How did they turn out? I always like to go back in time and try to understand, why did price go where it did? Okay, so we're going to take it back. I'm just going to have a quick little look. As you can see, yeah, it filled in the imbalance and then it reacted off of this sell to buy. This was the last sell to buy that had been mitigated. So you could have had an entry point here, but nevertheless, our entry was still good. Why? Because it accounted for the possibility with our stop loss and then gave us that reaction that we expected anyway, because that reaction is an hourly reaction because the institutional candle was based on the hourly time frame. So therefore, we get a reaction that is worthy on the hourly time frame as well, as you can see. And then once we get the reaction we expect, what do? We simply break even, right? So we simply break even immediately upon the reaction. And after that, it's just a patience game, okay? Now, once we've got our entry and we are currently in profit and we've broken even, we have nothing to lose and we have everything to gain. So then it comes down to take profit. Now, I took my profit at 109.74. The reason why is because there was an institutional candle here on the hourly time frame, a candle that led to the breaker structure of numerous lows over here. And I knew that a reaction there would be taking place. And as you can see, it literally does. And it's quite a pinpoint reaction according to where I took my profit. So I'm going to show you guys how I identified this take profit as well. So what I'm just going to do is I'm just going to go to the smaller time frame and we're going to look for where I took my profit and why. Right, so here we are inside the institutional candle and I decided to take my profit here. Why? Because there was this massive pocket of imbalance here that I knew had to get filled in, but then there was this little price action here on the minute time frame where price was buying and selling, led to a massive breaker structure taking out these numerous lows, as well as this little area of liquidity here. So therefore I knew that a reaction off of that little scattered area, which is obviously known as a base, would be taking place, and that reaction could warrant a complete reversal and lead to my trade hitting break even, right? So in order to avoid that situation, we take our profit here. Now I decided to take my full profit here because I had already held it for an entire day. I held it from the Monday to the Tuesday morning the following after. However, if you wanted to hold it even longer throughout the week, you could have just taken partials, half partial, quarter partial, whatever. Anyway, so that's where we took our profit. Let's see how price engages. So as you can see, price comes up, hits that take profit the morning after around 9 a.m. We then get our nice and simple 1 to 13 risk to reward, take profit, and obviously then the rest is history now. Now, obviously, if you wanted to hold it longer, throughout the week, you could have had up to a 1 to 30 risk to reward, which is crazy if you think about it, because if you're risking just 1%, you're literally gaining up to 30% from a single trade in the entire week. Also, another little nugget for you guys, if you guys check the candle of the Monday of the 19th, where I actually caught the entry, notice how when price came all the way down here, if I actually make it nice and clear, you can see price actually came beneath the lows, the previous lows here. So we had every opportunity to close beneath those lows and therefore break structure on the daily time frame. However, by the end of Monday, what happened? Price rejected the break of structure, came back up and then closed above. That means it has no intention of breaking structure and every intention of continuing its original trend, which was obviously an uptrend on the higher time frame. So that would have given you further confidence to actually swing this trade and hold it for the rest of the week, and so on and so forth. So that's a nice little nugget for you guys as well. Anyways, guys, I hope this video helped you guys. Feel free to ask any questions in the comment section below, or even feel free to send me a DM. And with that being said, I hope you guys have a wonderful weekend. Take care, best of luck, and peace.